Bold investing predictions for the next few years. March 28th, 2021. The market crash is coming. 2021 will be that year. It will be the year of short squeezes, over-leveraged hedge funds, Reddit, meme stocks, and the power of the retail investor. Asset managers buying in certain industries like tech might get smoked. If you're over-leveraged, now is not the time to be a fund manager. The dominoes are beginning to fall. The Korean hedge fund manager, Bill Hwang of Archegos Capital, liquidated $20 billion of his positions this week. Goldman sold $20 billion worth of assets. Fund managers are repositioning themselves right now. What does this mean for the next few years in equities markets? I've been thinking a lot about this over the last several months, and it's hard to understand. All of the following below are bold predictions that may or may not come true. Disclosure, it's not investment advice. Do your own due diligence. However, I'm beginning to have more confidence in the following predictions. Tesla will be a sub $100 stock within the next 2 years. ARK Invest will lose 20 to 30% more across their funds, and it could cause a huge unraveling that could ultimately bankrupt them. Biotech as a whole sector is going to underperform in the next few years, as generalist investors start to leave the industry that offered exceptional returns in the last year. They're going to rotate money out of risky, highly valued industries like biotech and into cyclicals and safer investments like energy, oil, commodities, bonds, etc. The whole market is going to lose 30 to 40% of its value, an all-time crash that will be talked about in history books. Oil, commodities, gold, and silver will be solid investments in the next decade. Inflation is coming. It's been too good for too long, and this pandemic only exacerbated that. Rich people got significantly richer, poor people stayed the same, and the US government printed trillions of dollars into the economy that will cause inflation and erode the purchasing power of its citizens. This harms people who don't have assets that earn more than inflation, effectively making their cash worth less over time. This mostly affects poor people. Watch the documentary I'd recommend to everyone that discusses where capitalism has taken us in the 21st century, called Capital in the 21st Century. Conclusion: not a very good place on its current path. The money flows in the last year since COVID have gone into the stock market, thereby making stocks go up. This generation's young investors, especially those who have gotten into the game in the last year, don't understand the market conditions that are occurring right now. They're probably thinking stocks only go up because in their investing careers, they have only gone up. They don't understand what it's like to invest in a down market. They may not understand how businesses work or the particulars of the specific industry that they're investing into. They may not understand quantitative easing and inflation and bond yields and debt cycles. When it all turns, which it will, people will lose a lot of money, especially over-leveraged hedge funds. Numerous margin calls are going to happen everywhere, thereby destroying billions of dollars of paper value. Look at what happened to Viacom CBS over the past week. The stock ran up to $100 and then down to sub 50 in the span of 1 week. 50% drop in value. That could happen more. Just wait. It could spiral. And yet, there are going to be fantastic companies on sale, as well as trades that make money in a down market. Inflation is coming. What does this mean? Real assets are going to be worth more. Gold, copper, silver, wood. Think of commodities as things that you can hold in your hand, or resources that come from the earth. There's a finite value of them because fund managers have been taught that inflation equals real assets, so people will start investing into those. Another one that could be an interesting thing is put options. Options are extremely risky, but right now I think is a good time for a lot of overvalued tech companies. Tesla is going to lose more than 60% of its value over the next 2 years. It could turn into the Microsoft, Cisco, and Yahoo, who lost 90% of its value at the height of the dot-com boom. Tesla has been the ultimate meme stock. Retail loves it, VCs like Chamath loves it, Cathie Wood loves it, and it seems like everyone loves it. The story tells itself, also as a way to stick it to the funds that have shorted the company. But Tesla is still limited by its manufacturing capacity and the ability to sell cars. They were valued at one point more than every single other car company in the world combined, and yet they own less than 1% of the global car market. That doesn't make any sense. Yes, you can talk about the batteries and potential for self-driving cars, but that's not coming soon. Tesla has also historically not hit on their targets. Batteries and previous versions of their cars have always been delayed. Elon Musk is a genius. He's our generation's Einstein, in my opinion. Instead of just being a top thinker or academic, he's putting his money on the line and making people think about life beyond our planet. I have the utmost respect for him and what he is doing. But Tesla right now is still a car company. When the market turns, this could get crushed. No matter what ARK Invest puts as its price target, which at one point in time they said $3,000 by the year 2025, it is due for a correction, like many other stocks. Tech had its decade in the 2010s, but will it be like that in this decade? I'm not so sure. No matter how much innovation is coming in the next few decades that are deflationary, the amount of money the US government printed still has to be covered. Inflation brings a different beast in the public markets. Many of today's investors were probably not investing during the 1970s of the oil crisis and stagflation. Index funds might get crushed in the next few years. Long term, over the course of 10 to 20, 30 years, still great investment for the average person, but it will not have a good few years. Even with all the technological innovation, these overvalued tech companies are not going to be valued as highly based on predicted future returns. Investors want to own businesses today that generate a predictable amount of money. That's going to hurt the innovation economy in the short term. So if you're an investor, where are you going? I won't speak for everyone, but a couple of things that I'm doing. 1. Buying commodities. 2. Buying puts in the short term. 3. Invest in de-risked and undervalued companies in healthcare, an industry I understand. 4. Buy great businesses on sale, like Berkshire Hathaway and Disney. Let's see what happens in the next few years. I'm going to manage a fund. It's going to happen. But be patient. Let life happen as it will. Be prepared. Keep working on yourself. Keep working on your craft. Keep getting better. You'll get there. You can't speed up time, and you can't speed up experience. So enjoy the ride. Again, wanted to follow up on this considering this was written in March 2021, and almost 2 years later, a couple of these have come true. So ARK Invest right now is down at least 80% from its peak. Biotech as a sector has underperformed relative to the rest of the market. I said the whole market is going to lose 30 to 40% of its value. I think we're down maybe 10 to 20%, and also think that there's much more to come. So could be right, could be wrong. Oils, commodities, gold, and silver will be solid investments. Many people have seen that over the last 2 years, relative to other companies, they've done okay. And I said inflation is coming in March 2021. And think about today how we have a massive global inflationary problem. In terms of what I recommended, in terms of commodities, puts, de-risked undervalued companies, great businesses on sale, I wrote that at that time, and I actually ended up buying puts on companies where I thought I would pay out, especially ARK Invest and Tesla. And this is when you learn one of the lessons of all great investors is you can never time the market. So even directionally, my thinking was correct, and I put bets on those specific companies. It didn't happen in the timeline that I thought. It was too short. So I thought this all would happen in 2021. Turns out most of it happened in 2022, and now looking into 2023. So one of the big takeaways I have, and I would recommend to everybody listening to this, is you can't time the market. You can directionally think it's correct and be positioned to capitalize when it does turn. But you can lose a lot of money, like I lost some, when you're not right around timing. So anyway, I wanted to add that because it's kind of wild to think 2 years ago I wrote this and a lot of it's played out. So if some of it's played out here, curious to see what else I've written that's also played out. So stay tuned. Lots more to come. Keep going. You're doing great.